Well, welcome everyone. Thank you for joining us on day 2 of Bitcoin for Corporations. And we have our second presenter today, Christine Sandler from Fidelity Digital Assets. Great to have you here, Christine. Thanks for taking the time.
Thanks, Phong. Thanks for having us.
Yeah, we're excited. This is Fidelity's second year presenting at Bitcoin for Corporations. And I was joking earlier with Christine that I think she's going to do a much greater job than Tom. And she probably didn't want to give any comment on that.
I'll pass on that one.
All right. Let's jump right in. Maybe you can start just by introducing yourself. And for those who are not as familiar with what Fidelity does on the digital asset side, a little bit of background on that and what sort of products and services you offer to corporations and institutions.
Yeah, I'm happy to, Phong. So I'm responsible for sales, marketing, and the research function at Fidelity Digital Assets. And I joined the firm about 3 years ago. And our product is fairly focused, as is our client base. So we are we're exclusively an institutional provider, some of our clients are corporations. And our product is focused exclusively on the custody and trading of Bitcoin. We've taken steps to integrate both our custody platform with our execution services platform, not only for a better client experience, but for risk management purposes. And, since our clients are primarily traditional institutional players, one of our objectives was to create a similar experience, to have a similar experience on the digital side that clients experience on the traditional side. So really to take some of the nuances that are unique to digital assets and pull them away from that client experience, so that it feels a little bit more like trading a traditional asset. And so a good example of that is we manage an omnibus. Our custody platform is omnibus. So we manage an omnibus pool of assets. And that's not just for marketing purposes or risk management or the client experience. We felt strongly that clients could really identify with that construct because it's very similar to holding assets in street name on the equity side. So it was really something that they could identify with in the traditional world. And then that construct really does kind of follow through from a risk management perspective. It's a better client experience, number one. And number two, it also enables us to minimize the movement of assets, therefore translating into reduced risk. And so it's really also something that our clients understand. And that thoughtful approach to risk management is really central to kind of how we operate our business. So we're among the first fully audited custody and execution services platforms, and that pragmatic approach to risk management is something that really does resonate with the traditional clients that we face. In addition to that, they're really accustomed to having strong customer support and client-facing relationships. Some of the relationships that we've had with our clients, institutions, corporations specifically, have spanned multiple decades, and that really resonates with them. So as they're approaching a new space where digital assets might be unfamiliar, they may look towards a familiar provider like Fidelity to get up to speed in terms of that asset class. So we also sought to create a robust research product so that we could help them kind of get up to speed with respect to learning about digital assets, not just the functional aspects of digital assets, but the broader ecosystem as well.
Great, thanks for that. Yeah, when folks think about institution grade vendors, corporations, partners, obviously Fidelity has come to mind for decades at this point. And I know you have trillions of AUM, but I think it may be a little bit of a surprise to hear for folks who are new to Fidelity Digital Assets that there actually is a digital component within Fidelity. Tell me about how that came to be, the origin story, if you will.
It's a great story. It's something that, we enjoy telling because it really resonates with clients. And it's something that, quite frankly, before joining the firm, I wasn't aware of it myself. So yeah, we're known definitely as an early mover in the crypto space, but those roots kind of go back to 1999, where Fidelity took the bold step of funding the Fidelity Center for Applied Technologies, which is where we study lots of different base level technologies. So whether it's AI or virtual reality, we began to study distributed ledger technology in a complete way, where we started mining cryptocurrency in 2014. So as part of our exploration of that foundational level technology, we started to mine cryptocurrency. And in mining cryptocurrency, we accumulated Bitcoin. We accumulated Bitcoin in 2014, looked at the ecosystem and said, wow, there's really no one that looks like us. Or, there were really, there were good retail on-ramps, but there was no one focusing on mitigating the gaps or concerns that institutions faced in the space. So we took additional steps to explore the space, implementing a couple of internal proof of concepts, the first of which was, could Fidelity Charitable, our donor advised fund platform, begin to accept appreciated crypto as part of the funding for donor advised funds? To date, that program or that pilot lives on, and we've taken in excess of $250 million worth of appreciated crypto in those funds, and then continue to explore the space, and then realize that we could actually potentially have a commercial business and a viable commercial business in the space, and thought, should we pursue retail or institutional? And to that nod, knowing that there were viable retail on-ramps, we chose the institutional path. And so while we're a Bitcoin first company, we fundamentally believe that we're building infrastructure to support the next several decades of innovation in financial services and beyond. And that's really part of the core of what Fidelity as an organization provides. So very strong focus on technical and technological innovations, both for our clients, for Fidelity, and for the broader ecosystem.
That's fascinating. So going really from an internal innovation or venture effort into Bitcoin mining, into providing institutional grade exchange and custody services. When did you first launch your exchange and custody services?
We first launched our exchange and custody, our execution services and custody platform in 2017. We got our received our limited purpose trust license in 2018 and onboarded our first clients in 2018.
Great. And you started off on this a little bit, but maybe you can sort of zero in on it. So what are the big differentiators? If someone's looking for, I'll keep using exchange and custody services. I think you have more branded words for that, but like what differentiates Fidelity if I'm a public company and I have to decide who to work with for exchange and custody, Fidelity versus your competition?
Look, I think there are some key differentiators. And it's really not just our brand, but it's really our approach to the space in general. So we talked a little bit about kind of extrapolating what's unique about digital assets and kind of taking on that operational burden. That's absolutely part and parcel of it, but really it is our pragmatic approach to risk management. So when we think about this ecosystem, we think about how can we begin to mitigate risks of all kind, and that's the lens that we look at with respect to our business. So the other thing is, I think the other thing that's really valuable about the Fidelity relationship is that we've also had relationships with clients that span several decades. And in getting to know that client's business, we uniquely have had visibility in terms of how we can serve that client best. So for many clients, digital may not be their first interaction with Fidelity. We may provide treasury management services or a 401k plan to corporations. So we have a really strong base of knowledge on how that client needs to be serviced and how that client wants to approach potentially new and innovative products. So having those trusted relationships is really a key differentiator, number one. And number two, that level of service and support is unique to Fidelity.
Great. So better service and better security. The two S's, I guess we'll go with. Excellent. So we had you here at we had Fidelity Digital Assets at our event last year, basically a year ago today. Obviously, a lot has changed in the market in the last year. Most of it, very positive. From your perspective, right? Like having been really a crypto leader in a space for multiple years now, what do you think's changed in the market and the business last year?
Yeah, so I think we saw significant changes. I mean, obviously, those changes began in 2020, and one of the things that we do that really helps to ground us and reinforces kind of what we see from a boots on the ground perspective, from a sales perspective, and interacting with clients is every year we have a digital asset investor survey. So we query hundreds, if not thousands, of digital asset investors as to their sentiment around digital assets. And it gives us the ability to look at trends in the space that are really specific. And look, I think it's very clear that we saw significant institutional adoption. But what we wanted to do was dig down and say, where were those really strong pockets of digital asset, that institutional digital asset adoption? And we did find significant strength in family office, registered investment advisor, and really emerging adoption on the corporate side and on the pension side. And so that gives us the ability to be focused in terms of deploying our resources based on client demand. We did see a growth across all segments. We also have a tremendous amount of clients that still have foundational level questions about the broader ecosystem, Bitcoin's role in a portfolio, and digital assets in general. And this is why we took particular steps to build out a research team that was focused on creating institutional grade research that was definitely balanced and sought to really reach a diverse institutional customer base. And so it wasn't specific to, say, an RIA. It was really broadly based, but meant to be very balanced in nature. I think the great thing about the content that's available in digital assets, it's totally open source. So you can really find any kind of information, but it may lack that kind of balance. It may be very promotional, and maybe very optimistic. We're really proud to say that we sought to fill that gap. And so our most recent research reports have gotten a lot of press and a lot of great client attention. Getting Off Zero is a foundational level piece that explores kind of how to get started in the space. And, while I think that we've seen tremendous growth in terms of the institutional adoption, if you think you've missed it, you haven't. There's still a fairly long tail of folks that are just beginning to get started in this space. We take for granted that everybody knows what a blockchain is, and everybody knows kind of what Bitcoin's role kind of within the global macro picture is. That may not be the case. So we do have many clients that are beginning to kind of explore the narrative around digital gold or Bitcoin's role in a diversified portfolio or as part of a balance sheet.
On that research topic, I think Fidelity just recently published something around why Bitcoin should be considered differently or separately from other digital assets. So, and as of now, as you mentioned, your services and products are Bitcoin focused, but you're really building a foundation for digital assets in general. Tell me about how Fidelity thinks about Bitcoin versus everything else in the digital assets world.
It's a great question. So we definitely are a Bitcoin first organization. And the reason we're a Bitcoin first organization is the fact that we're focused on the traditional space. So traditional financial institutions, traditional institutions, that was primarily kind of the directive that we were hearing. So most of our clients were specifically asking about Bitcoin. So if it's 90% of what you hear, you're going to dig deep on that subject. But it's also really, if you're exploring a brand new space, like a brand new asset class, it makes sense to kind of dig deep on a specific asset. So I would say we are definitely a Bitcoin first organization, but we are not exclusively a Bitcoin organization. The vast majority of our clients still primarily ask about Bitcoin, but we are seeing an increasing demand for additional assets. So I think the beauty of that is clients initially become interested in digital assets, ask about Bitcoin, develop a base of knowledge, and then quickly move on into other assets. I would say corporations are primarily focused on Bitcoin, given that reserve asset status. But when we think about adding adding assets to the platform, and we do intend to add more assets to our platform. We've been public about adding Ethereum, at least in the near term. We think about it, the lens that we look at is clearly client demand. Is there client demand for those assets? Potentially, what's the technical feasibility of us adding those assets to the platform? And then finally, what's the regulatory construct? And we do know that Bitcoin and Ethereum have some degree of regulatory certainty, and that in itself is a factor to ourselves and our clients. But we also have had a handful of clients, even corporate clients, if they have customer-facing business or consumer-facing businesses, ask about other assets as part of a merchant services platform. We don't offer services like that. We've been asked for support for Dogecoin and things like that, but we don't intend to offer that in the future, at least in the near term.
Right. So you mentioned you talk to a lot of folks, prospective customers, existing customers, family offices, hedge funds, corporations, treasurers, et cetera. Let's focus a little bit on the corporations and the treasurers that you speak to. What are the thematic areas that they are asking you about, right, as they want to enter into a Bitcoin strategy? And what are some of the concerns, and what are the things that they're excited about when you speak to them?
Yeah, so I think they're looking to get a perspective on the ecosystem. So for many of them, a lot of the dominant players, aside from Fidelity, are kind of new entities. So I think this is an exploration into the overall ecosystem for the players. How does the ecosystem function? And there are some frictions that exist within this emerging ecosystem that are unique to this asset. So it's a fair amount of fragmentation in terms of trading. It's about understanding kind of those types of frictions. Beyond that, I think there are things that we have that are things that we cannot change immediately, but there are ways in which we can work together with our clients to raise the dialogue. And one of those is obviously the tax treatment of Bitcoin. So Bitcoin is treated as property, and that tax treatment may be unique. This is something that we have boots on the ground advocates within DC, where we are part of the dialogue as a practitioner in terms of advancing and discussing these issues. And so those are the types of things where we can be an effective partner to corporations. So that's something where I think that's a unique value. The other thing is, if a corporation is a long holder of Bitcoin and then maybe wants to focus on something like capital efficiency, it's not exclusive to corporations, but we've developed a collateral agent product where we safely hold Bitcoin that can be used to act as collateral for a bilateral loan transaction between borrower and lender. We don't get involved essentially in the loan transaction, but it provides a framework for that client to safely hold Bitcoin in custody and then get a potentially a US dollar loan against that Bitcoin. So it gives some degree of capital efficiency around that Bitcoin. It's definitely a unique product. We're adding additional lenders to that platform, and we hope that platform grows. So that's exciting. And some clients are actually, as part of their exploration in Bitcoin, are asking us to provide solutions for their employee base. So given the status of Bitcoin and given the growth in digital assets, there's an emerging interest in how does Bitcoin fit into a retirement fund. So those are some of the types of things that we are thinking about. Many of our corporate clients are asking for our assistance in terms of providing Bitcoin exposure to their employee base. So that's exciting as well.
What are the biggest objections you're hearing from corporate treasurers about entering into a Bitcoin strategy?
I would say the biggest objections are, and I think, look, I don't think anybody did a better job exposing those objections than Michael in his exploration. I think, look, you need to have, it's not a single person that's making that decision. It is really board level exposure. So you need strong degree of buy-in, there's still what we find are objections across the board that we consistently hear. So whether it is ESG concerns or Bitcoin tied to crime, we absolutely can counter those arguments, but there's still persistent obstacles. And if those are raised at the board level, those can potentially derail even a comprehensive Bitcoin strategy. So it only takes one.
Got it. Thanks. Look, I think Fidelity, when they put, when you put your energy and brand and capabilities behind something, it makes it mainstream, right? And you talked about some things you're working, and mainstream is a good thing, by the way. You talked about some of the things that you're working on. I think you talked about employee solutions, so maybe letting people invest into Bitcoin through 401k, which I think is awesome. Bitcoin-backed loans, great. You talked about other coins, right? Maybe less great, but if you want to do that, go for it. I know you've also pursued a spot ETF. And what are some of the other things that Fidelity is seeing in the next year, whether broadly with the Bitcoin ecosystem, products that will go out there, or things that you're specifically focused on?
Look, I think given the appetite for our clients, a couple of the things that we saw out of the digital asset survey, and we always kind of go back to that survey because it really grounds our assumptions in practical thought. By 2026, our survey respondents, 90% of survey respondents expected to have Bitcoin in a portfolio. That in itself is mainstream. So we're marching towards that 2026 goal where we believe this will be a mainstream asset. If that's a mainstream asset, then we need lots of different types of either exposure vehicles or ways in which the clients can interact in ways that are useful to them. So expect from us that you'll see additional product development on the asset management side, given the fact that, look, it is potentially challenging for traditional investors to hold spot Bitcoin in portfolios. So I would expect that, yes, we're an ETP hopeful in the US. We will be launching additional products in other jurisdictions, and we'll continue to innovate on the asset management side because of those exposure products are critical to the more mainstream adoption of digital assets in general. But we'll continue on the spot side as well, because there's real value in holding the physical asset as well.
Well, I think you're trailblazers, really. And I think the leadership of yourself and of Tom and the firm has just been fantastic in this space. So for those who are listening to the conversation, they're like, okay, I want to find out more. I want to potentially kick the tires on working with Fidelity. I want to learn more about the organization, subscribe to the research. Where should they go?
Yeah, definitely. So definitely take a look at Fidelity Digital Assets, our website. You'll see all of our published research will be on, and that includes kind of investment thesis pieces, exploration of kind of the infrastructure. So really how the ecosystem functions, more foundational level pieces, and then really seeking to address some of the concerns that institutions have when we go. I'm going to go back to the survey. A couple of the questions that clients have raised were around volatility and the lack of valuation services. So look for us to begin to close those gaps from a valuation perspective, because I think as an institutional provider, these are the types of things that clients are coming to us with. So I think that's an emerging construct around, how do I value this asset? What is its role in a portfolio? And so take a look at our most recent pieces. They're beginning to address those concerns. We're going to look to build on those narratives as well.
Well, that's great. And I think you would serve as a great resource, especially for corporations, either well on their way or starting to look into getting into a Bitcoin strategy. Thank you so much for your time, Christine. Thank you for what you do and what your organization does for the Bitcoin space. Really appreciate it.
Thanks, Phong. We can't thank you all enough as well for raising the awareness of this valuable asset and asset class.
All right. Take care.